Konnichiwa. In this week's edition, we talk about what's been happening on the UAE markets and our stock of the week, which is Dubai Financial Market, or DFM. In June so far, markets have rallied strongly in the UAE. The DFM now is up year to date 28%, and the ADX, or Abu Dhabi Stock Exchange, is up 20%. Values traded on the DFM have also increased, with the DFM trading on average 700 million worth on a daily basis, rising from 600 million during April and 300 million during January and February. What's been driving this is increasing foreign investor activity. Foreign investors now account for 40% of the activity on these markets, up from 35% earlier in the year. Also, institutional activity has increased. Institutions now account for 21 or 22% of the activity on these markets, up from 15% earlier this year. In addition, oil prices have rallied strongly. They are now up 8% during June. Given the correlation between oil prices and the DFM and the ADX, a higher oil price has meant stronger volumes and better sentiment for the local markets. This is because a higher oil price means greater fiscal income, greater corporate earnings and better sentiment in the UAE. Given the recent rise in oil prices, many experts are now predicting that oil will reach $80 per barrel in the short term. This has very positive implications for local markets, and in particular large cap stocks that are largely sentiment driven and driven by foreign investors. These include Eldar, Arab Tech, Saru, Emaar, National Bank of Abu Dhabi and Dubai Islamic Bank. We've also had some positive news from the property market this week. Reports by HSBC, Standard Chartered Bank and real estate advisory Cluttons suggest that property prices that is, have reached a market clearing rate in Abu Dhabi and Dubai and actually stabilised. This is during May and following 6 months of steep declines, and indicates that the property market may have found a bottom in the UAE, which is excellent for stock prices considering that property is the second largest sector in the UAE. We still remain cautious on the property market in the UAE during the second half of 2009, and our preferred exposures in that space are Abu Dhabi developers Eldar and Saru. So wrapping up what's been happening on the markets here this week, we've seen strong rallies in banks, in property stocks, and in particular the large capitalisation stocks that are linked to foreign investment and institutional activity. This bodes well for the financial markets because the foreign money is starting to come back into the country, which is also encouraging the local investors to put their money back into the stock market. This has caused stock prices to rise and greater values traded, as we discussed before, which all bode well for investors who put new money into the market during the second half of this year. So the company to buy for this week is the Dubai Financial Market, or DFM. DFM is a listed exchange, so it trades on its own exchange, has its own share price, and investors can buy or sell from overseas and also locally. The DFM's market cap is 15.4 billion dirhams. Foreign investor limit is 40%. The greatest shareholder in the company is Bourse Dubai, with a holding of 80% of the stock. Bourse Dubai is a government-related entity which guarantees some support from the government of Dubai for the company, which we believe adds to the quality of the stock. 70% of the company's earnings is derived from brokers, trades and values traded on the exchange. There are 101 brokers associated with the DFM and 65 companies listed on the exchange. So looking at the key drivers for the DFM, firstly, the DFM is one of the premier exchanges in the GCC region. Although it has a market capitalisation of only 8% of all the companies in the GCC, it controls around 30% of the volumes traded, which highlights the strong market position that the exchange has over rivals in the GCC. because of its advanced trading platforms and investor relations and ability to take companies around the region, we believe that the DFM is likely to hold its market position as the preferred exchange for new companies to list in the region. Secondly, the DFM is leveraged to the long-term growth of the GCC as the preferred exchange. Although the current financial crisis has meant that a lot of companies have decided to hold back their initial public offerings and listings on the DFM, there are a number of state-owned utilities and infrastructure companies, plus a number of family-owned businesses that are waiting to list on the DFM once volumes and equity markets improve. Therefore, the long-term growth of the DFM is likely to be strong as these businesses list on the DFM and the DFM derives IPO fees as this occurs. Thirdly, as we discussed earlier, average values traded on the DFM have improved substantially during 2009. Initially from 300 million average daily value traded, it's increased to 600 million during April, 700 million during May, and has been averaging above 1 billion dirhams for every day in early June. Because the DFM derives 10 basis points of earnings for every dirham traded on the DFM exchange, rising values and volumes traded are excellent news for earnings on the DFM. Because 2008 was such a strong year, overall we believe that 2009 net profit will drop by 25%. However, in 2010, our net profit forecast rebounds strongly, rising by over 55%. Therefore, the earnings profile of the DFM is getting far better before it gets worse. Long term, we believe that rising foreign and institutional investment in the DFM listed companies will lead to stronger earnings growth and indeed exponential earnings growth long term. The DFM is a strong cash flow company. It has a low operating cost structure and very low capital expenditure, and therefore a lot of the cash flow is free cash flow and flows straight back to the company, allowing it to pay generous dividends to shareholders. In 2008, the company paid 8 fils per share, equating to a generous dividend yield of 6%. This just adds one more level of attractiveness to investors in the DFM. The last price of the DFM was 1.91 dirhams. Our target price in a bull case scenario is 2.46 on a 12-month basis. If you add on a expected dividend yield of 4 or 5%, this equates to a generous 12-month price return for investors. So that's all for this week. Happy investing and domo arigato.